Welcome to Economics AS Paper 2, October 2019. The first question said, the short-run Phillips curve illustrates a possible trade-off between what? Economic growth and income inequality, inflation and unemployment, economic growth and protection of the environment, inflation and income inequality. When we talk about the short-run Phillips curve, we're simply talking about a graph that shows the inverse relationship between inflation and unemployment. Now, when we talk about inflation, we're simply talking about a persistent rise in the price of goods and services within the economy. And for unemployment simply means a situation whereby individuals who are willing and able to work could not get employed. So a fall in unemployment rate will bring about a rise in income level. And as soon as income level increases, demand for goods and services increase, which means aggregate demand will increase. And as a result of that, there will be a rise in inflation rate. That's why there's inverse relationship between unemployment and inflation. Thank you. So the answer for question 1 is B. So question 1 is B. So we'll go to question 2. It said Ghana's rate of economic growth increased from 3.6% in 2016 to 8.5% in 2017. Which one of the following is a likely result of this increase in the rate of economic growth? When we talk about economic growth, it simply means the GDP of a country increases over time. So what will bring it said, which one of the following is a likely result of this increase? So if there's an increase in economic growth rates, it will definitely have impact in the economy. So let's look at the options we have. An increase in unemployment. If the economic growth rate is increasing, it simply means that unemployment is expected to fall over time. It is not A. A decrease in investment. A decrease in investment simply means a fall in capital goods. But if the economy is growing, it's simply part of the reasons why the economy will grow is that there's an increase in investment. So it is not B. An increase in living standards. Because the economy is growing, it simply means the income level within the economy would also rise. And if the income level is increasing, people will be able to afford things that they are not able to afford before now. And that simply means the living standard is expected to rise over time. So the answer is C. A decrease in tax revenue. No, economic growth rate. If the economy is growing, it simply means income level is increasing. Profit made by firms would also increase. And as a result of that, that will bring about an increase in tax revenue. Income tax will increase. Corporation tax will also increase. So it is not D. So the answer is C for question 2. Question 2 is C. Question 2 is C. So go to question 3. For question 3, they said, for question 3, they said, the UK government is spending 56 billion on building HS2, a high-speed railway network. Which one of the following is also an injection into the circular flow of income? When we talk about the circular flow of income, we're simply talking about this how income is being injected in terms of injections and withdrawals within the economy, how income goes in and out of the economy with household, firms, import, export, and the rest. So now the question, they said, which one of the following is also an injection in the circular flow? Increase in spending, increased spending on imports. Imports represents withdrawal within the economy, so it is not A. Increased spending on exports. An increase in spending on export is more of injection into the economy because it means the country is selling, it's exporting, and as a result of that, there's inflow of income within the economy. Imports brings about outflow of income, that is withdrawal. Increase in spending on exports brings about inflow of income because that represents goods sold to foreign customers. Import represents goods sold, goods purchased from foreign businesses, and that is withdrawals. Export represents goods sold to foreign customers, and that is injection. So the answer is B, but let's look at C and D. For C, they said increased level of savings. Savings means what we did not spend. And if we don't spend, it simply means there's withdrawals within the economy. That does not add to the income. It's withdrawal. So it is not C. Increase in income tax receipts. For tax receipts, this is a fiscal policy. And that talks about budget of the government. So the answer for question 3 is increased spending on exports. So export represents injection, import represents withdrawals, saving also represents withdrawals, and for income tax receipts, increased income tax receipt also represents withdrawals because it simply means the money that is not spent, that is paid as a levy to government. So the answer for question 3 is B, which talks about circular flow of income. Thank you. So going to question 4. We'll go to question 4. In 2017, a fall in mining and manufacturing production led to the Brazilian economy operating below its productive potential. Mining represents the primary sector of the economy, and manufacturing represents the secondary sector of the economy. So a fall in both the primary sector and secondary sector brings about a negative output gap. That is what it simply means here. So which one of the following is most likely to be associated with a negative output gap? For a negative output gap, it will be as a result of high unemployment. So the answer for question 4 is A. So let's look at B. Option B, high business confidence. High business confidence will bring about a positive output gap, not negative. Increase in house prices, that will bring about a positive output gap because it simply means wealth increases for households. An increase in well-being, that will also be as a result of a positive output gap. So B, C, D are positive output gap. So the only negative output gap we have here that is linked, or that can be linked with a fall in the productive potential of an economy is high unemployment rate, because high unemployment simply means unemployed resources. And it simply means that the economy is, the Brazilian economy is operating inside the PPF. So the answer for question 4 is A. Question 4A. So go to question 5. For question 5, the diagram shows aggregate supply and aggregate demand for an economy. So we have the aggregate demand and aggregate supply. When we talk about aggregate demand, we're simply talking about the total demand within the economy. So here they said, which one of the following was the most likely cause of a change from AD to AD1? A change from AD to AD1 will simply means that all the components of either one of the components of aggregate demand would have increased. Now, an aggregate demand is consumption plus investment plus government spending plus net export. And when we talk about net export, we're simply talking about export minus import. So an increase in consumption will bring about a rightward shift to the AD curve. An increase in investment will bring about a rightward shift to the AD curve. An increase in government spending will bring about a rightward shift in the AD curve. An increase in export will bring about a rightward shift in the AD curve. But all I've said now, a fall in any of the components I mentioned above, I mentioned recently, will bring about a negative, will bring about a leftward shift into the AD curve. So let's look at the options we have. A decrease in government spending. A decrease in government spending will represent a leftward shift to the AD curve. So it is not A, because we need to find out where we have a rightward shift. An increase in interest rate. An increase in interest rate represents a high cost of borrowing. And if borrowing increases, if the cost of borrowing increases, it means households and firms will not be able to borrow for investment or consumption. And both investment and consumption are expected to fall. And if they fall, it simply means aggregate demand would shift leftward. It is not B. A decrease in net export. Net export represents export minus import. A rise in net export will bring about a rightward shift to the AD curve, while a fall or a decrease in net export will bring about a leftward shift to the AD curve. So it is not C. And the last option we have is option D. and which is the answer anyway. So the answer for question 5 is D. So let's look at how it is D. An increase in consumption. Consumption is the money that is, consumption represents spending on goods and services. And an increase in consumption is one of the components of aggregate demand. So an increase in consumption will increase aggregate demand, and that will shift the AD curve rightward from AD to AD1. So the answer for question 5 is D. We go to question 6. They said the chart shows the government budget between quarter 3 of 2013 and quarter 1 of 2018. When I talk about government budget is a financial plan on how revenue and expenditure will be used within the economy. So we have a rise in government. So they said, what can be deduced from this chart? There was a budget surplus in quarter 3 of 2015. Quarter 3 of 2015, there's a government budget, there's a surplus budget. And let's look at how it is a surplus. It's a surplus because it is revenue exceeds expenditure. So it is a surplus budget. So the answer is A, but let's look at other options. There was a budget deficit in quarter 3 of 2013. Quarter 3 of 2013, there's no deficit. Quarter 3 of 2013, there's no deficit in quarter 3 of 2013, so it is not B. Tax receipts exceeded government expenditure in quarter 1 of 2017. Quarter 1 of 2017, expenditure, this is a deficit, which represents more spending than, more expenses than receipts. So it is not C. And D, government expenditure exceeded tax receipt in quarter 3 of 2015. Quarter 3 of 2015, no, we have we have a budget surplus. So it is not deficit, so it is not D. So question 6 is A. Question 6 is A. Question 6, A. So we go to question 7. They said Bosnia, a country in Europe, experienced high levels of unemployment. In 2013, the unemployment rate was 46%, and in 2018, it was 37%. Explain one possible effect of high rates of unemployment on the public finances of Bosnia. So first, what is unemployment? Unemployment is a situation whereby those who are willing and able to work cannot have a job or cannot secure one. A higher level of unemployment will bring about a rise in government spending through unemployment benefits. And when government spending on unemployment benefit increases, this will affect government budget and it will affect the public finance. So this in turn affects the government budget, as government may be spending more than it's receiving as a result of a rise in unemployment rate. And this reduces government revenue. It also reduces government revenue through taxation, income tax. So according to this extract, the unemployment rate in Bosnia fell by 9% between 2013 and 2018. That's the answer for question 7. So we go to question 8. For question 8, it said the chart shows the balance of payments on the current account for Thailand as a percentage of GDP for the period 2010 to 2017. With reference to the chart, explain the difference between current account deficit and the current account surplus. When we talk about current account surplus occurs when the value of export of goods, services, and transfers and investment income is greater than the value of imports of goods, services, transfers, and investment income. That is current account surplus. And when it comes to current account deficit, it simply means that the value of imports of goods, services, and transfers and investment income exceeds the export of goods, services, transfers, and investment income of a given economy. So that's the answer for question 8. So go to question 9. They said, since 2012, the United Arab Emirates, UAE, has experienced a high rate of economic growth. This has resulted in rising business confidence. Explain one possible impact of increased business confidence on the economy of UAE. A rise in business confidence is likely to increase businesses' investments. And this means businesses will be able to spend more on capital goods, which will result in an increase in aggregate demand within the economy. So a rise in business confidence, which will in turn increase investment, is likely to increase output within the economy, which will in turn lead to what? A rise in economic growth. However, This may bring about resource depletion as firms may use up resources. So the negative impact about increased business confidence is that it might bring about using up resources. And that does not bring about sustainable development. So that's question 9. We'll go to question 10. For question 10, in 2017, real wages rose by 19% in the Ukraine. This led to a 7.8% increase in consumption. Draw a short-run aggregate supply and an aggregate demand diagram to show the possible impact of this increase in consumption on the price level and real output. Consumption is a component of aggregate demand, which simply means spending on goods and services. An increase in the real wage. Real wage means it has been adjusted with inflation. So an increase in the wage rates for inflation, sorry. An increase in real wage means purchasing power of households will increase. And if purchasing the power of household increases, it simply means aggregate demand within the economy would rise, which will shift the aggregate demand curve from AD1 to AD2. And as a result of that, the price level is expected to rise from P1 to P2 because the real output will also increase from Y1 to Y2. So this is a graphical representation. I'm going to draw the graphical representation of what I have just said. So this is the graphical representation of what I just said now. P1. This is AD1. This is Y1. Then we have these are real outputs. Then we have AD2. We have our short run aggregate supply, and the price level will be P2. So these are our price level, and this is real output, and Y2. So this is the graphical representation of an increase in consumption. An increase in consumption will shift the aggregate demand curve rightward from AD1 to AD2. The price level will rise from P1 to P2, and the real output will increase from Y1 to Y2. So that's question 10. We go to question 11. So for question 11, they said the table shows the nominal GDP. The nominal GDP for per capita between 2016 and 2017. Show your workings. So we have GDP per capita. GDP per capita is GDP divided by the total population. So we have the GDP per capita for 2016, but we need to find the GDP per capita for 2017. So the GDP per capita for 2017 will be GDP divided by the total population of 2017. So that represents, so we have it here for GDP per capita 2017 equals 19 billion 390.6 divided by 0.3257. So that gives us the GDP per capita, which is 59,535.16. So these are GDP per capita for 2017. Then we need to find the change in GDP per capita. So the change in GDP per capita will be GDP per capita of 2017 minus GDP per capita of 2016 divided by GDP per capita of 2016 multiplied by 100. So we're going to have 59,535.16 minus 57,589 0.70 divided by 57.589.70 multiplied by 100. So that gives us 3.38%. So that's the answer for question 11. We go to question 12, which we have the case study for it. So we have the case study for question 12. Here's the case study for question 12. So we have the case study for question 12, the extract. So the extract, this is the extract for question 12. This is figure 1, figure 2, and we have the extract A and B. So I'm just going to go through the question. They said, define the term base rate of interest, figure 1. So figure 1, the base rate of interest in figure 1, this is figure 1. So based on what we mean, the base rate of interest is simply the cost of borrowing that is charged by the central bank by the central bank to commercial bank. So that is what we call the base rate of interest. Then 12b, they said, with reference to figure 2, this is figure 2. This is figure 2. Explain the term recession. What is recession? Recession is a fall in economic activity for 2 consecutive quarters. So recession here, recession in Argentina, based on what I see in the graph or in the figure 2, there was recession in Argentina between quarter 4 of 2015, which is negative 1.2, and quarter 2 of 2016, which is negative 2.1. I think that is clear. So that takes us to question C. They said, with reference to extract B, we'll go to extract B. With reference to extract B, analyze one possible impact of the fall in the value of the peso on Argentina's current account on the balance of payment. This is the case study anyway. So exchange rate first. What is exchange rate? Exchange rate is the price of a country's currency in relative to other countries' currency, like the peso, the price of the peso compared to the dollars. So the current account measures the total value of exports minus imports. That's the current account. So a fall in the value of peso, based on what the question is saying, a fall in the value of peso will in turn make exports become cheaper, while import becomes expensive. And this will increase the value of exportation, which will in turn improve the current account balance of payment. So according to the extract B, the value of peso fell by 12% against the dollar. It is written here, 12% against the dollar. So that is question 12C. So that takes us to question 12D. So with reference to the information provided, examine the likely impact of inflation on the economy of Argentina. So the impact of inflation on the economy of Argentina. So first, you have to define inflation. What is inflation? Inflation is a persistent rise in the price of goods and services in a given economy. So the inflation rate was between 30%, based on what we have here. The inflation rate was between 30%. Here. So the inflation rate was between 20% to 40% per year. This implies that prices of goods and services are increasing. This makes the Central Bank of Argentina to respond by increasing the base rate of interest by 40%, which is in the extract B. So to reduce spending and increase savings, this may in turn reduce demand pull inflation. Inflation is likely to reduce investment within the Argentine economy. So a fall in investment will reduce aggregate demand. This will be as a result of firms losing confidence on the economy. So as persistent rise in prices may not allow them to plan towards future investments. So a rise in the rate of inflation may increase the cost of production for firms as workers may demand for a higher pay to cover up for the fall in their purchasing power. So these are the implications or the consequences or the impacts of inflation when it comes to the Argentina economy. So that's question 12C, question 12D. So we'll go to question 12E. It said, using the information in extract A and B, discuss policies that Argentina government could use to increase consumption. First, what is consumption? Consumption is the total spending of households on goods and services. So consumption is a component of aggregate demand. So there are different policies governments may use to increase consumption within the economy. For example, fiscal policy. When we talk about fiscal policy, we're simply talking about the use of taxation or government spending, borrowing, to increase aggregate demand within the economy. So government may use a cut in taxation like income tax, which is taxes levy paid by individuals and small businesses on their earnings. Government might use it. So a cut in income tax will increase the purchasing power of households. And as a result of that, they might be able to increase the demand for their goods and services. That is fiscal policy. And this will in turn improve the living standards of the households. Another fiscal policy that government could use, or demand side policy that government could use, is subsidies. And when we talk about subsidies, subsidy is a financial help from government to reduce the cost of it's a supply side situation anyway. So the subsidy is the financial help from government to reduce the cost of production. And if the cost of production reduces, it simply means firms will be able to sell at a reduced price, and that makes goods and services affordable for households. And that would increase consumption, and it will increase aggregate demand within the economy. However, both a cut in taxation and increase in government spending are likely to increase demand pull inflation within the economy. Also, there might be government failure as the level of subsidy or taxation needed within the economy, as government may not understand the level of taxation or subsidy needed within the economy. It might be too loose or too tight to solve the market failure. So as a result of that, there may be government failure. So that's question 12E. So that takes us to question 13. So going back up to question 13. So we have options to choose either question 13 or question 14. So I choose question 13. So for question 13, for question 13, they said, about productivity. And when we talk about productivity, productivity simply means output divided by input. So when we talk about productivity, it simply means output divided by input, or output in relative to input. So for economic growth, here, based on the question, it said the productivity in France and Germany was significantly higher than in the UK between 2007 and 2016, or 2007 and 2016. Evaluate the importance of productivity for the rate of economic growth in a country. First, productivity. Productivity is output divided by input. So economic growth rate is the percentage increase in the GDP of a given economy. So an increase in productivity will increase the GDP of a given economy, as it implies that the productive potential of the economy is likely to increase. An increase in productivity is likely to increase the profit made by firms, which will in turn increase government revenue through corporation tax. An increase in government revenue is likely to increase government spending, which will in turn have a multiplier effect on the GDP. So these are still impacts of increase in productivity. Higher productivity is likely to increase exportation, bringing about improvement in the current account balance of payments. A rise in productivity is expected to increase the long-run aggregate supply curve, shifting the long-run aggregate supply curve rightward, and this can be graphically represented. So for the question 13, so the graphical representation of question 13 for a long-run aggregate supply curve to based on the fact that productivity is increasing, the LRAS curve is expected to rise or to shift rightward from LRAS1 to LRAS2. So I'm going to draw the graph for increase in productivity now. So this is the graphical representation of an increase in productivity. So we have our real output, our real output. So we have our price level, our price level. So we have we have the AD curve. So we have our LRAS1, this is classical, LRAS2, AD1, AD2, and this is our price level. So these are our real output, Y1, Y2. So this represents an increase in the productive potential of the economy or an increase in productivity. Then, however, an increase in productivity may lead to conflicts on macroeconomic objectives, such as environmental damage. If the increase in productivity occurs within the primary or secondary sector of the economy, it may increase pollution, which may in turn lead to poor health situation. An increase in productivity may increase the cost of production for firms, as workers may demand for more if the rate of increase is as a result of labor productivity. And what is labor productivity? Output divided by numbers of workers. Also, if the increase in productivity, which will bring about a cost push inflation. Also, if the increase in productivity is as a result of investment in capital goods, that is capital productivity. And when we talk about capital productivity, we're talking about output divided by the number by capital employed. So if the increase in productivity is as a result of investment in technology or equipment, firms might as well continue to replace workers with equipment. And as a result of that, it will bring about technological unemployment. So this ends paper 2 of October 2019. Watch out for more of my economics past paper. Thank you.